In this video, we're going to be discussing accounting for interest when interest is paid or received in arrears. And in arrears means it's paid for interest that happened in the past, interest that we've incurred in the past, or interest that we've earned in the past. So interest in arrears is interest for the past periods. So it could be interest that you have to pay, that's an interest expense on a loan, where you pay the interest for the periods before up to a certain date, or it could be interest that you earn on an investment or an asset. That means you earn interest up to a certain date for the period in the past up to that date. So interest in arrears, you always have a date and then you work backwards to what was the period of time for which the interest was paid at that date. So interest is paid for the period in the past. So the first step is always to look at the capital amount of the loan or the capital amount of the investment. This is always step one. We want to know what is the amount of the loan or the asset at the beginning of the year, what is the amount of the loan or the asset at the end of the year, and what are the changes during the year. So this timeline is for 12 months, which is our financial year, and we're going to be doing step one, calculate the loan or investment balances at beginning and end of the year and when it changed during the year. So we're saying that we had a loan balance or an investment balance of 100,000, and 5 months into the year, it went down by 20,000. So that means from this point onwards, for the next 7 months of the year, the balance is 80,000. 5 plus 7 is 12. So for 5 months of the year, the balance was 100. For 7 months of the year, the balance was 80. So that's the first thing that you need to know, is how much is the capital amount. Capital amount is the amount excluding interest. So this would be your journal entry that you would have done. If there was a loan and you were reducing the loan, you would debit the loan on the 31st of May. If we say that our year started 1st of January, ends 31st of December, then 5 months into the year, we reduce the loan by 20,000 and we credit bank because that's where the payment is coming from. If this was an investment and asset, then that would reduce, but now we would receive money because the asset is going down. So when you withdraw from the asset, you will credit the asset and the money will come into your bank account. So here it's going to be a debit to bank and a credit to the investment. So the investment balance would have been 100,000 and it would go down to 80,000 from the 31st of May. So this is what your general ledger account would look like for the capital portion of your loan. At the 1st of January, you have a credit balance of 100,000. The 31st of May, we've just done the journal entry where you credit bank, debit the loan with 20,000. So from the 31st of May onwards, your loan balance becomes 80,000, and that's the balance until the end of the year. 31st of December, you owe 80,000. If this was an investment or an asset, then it would have an opening debit balance at the 1st of January, and that balance would reduce 5 months into the year on the 31st of May. We did this journal entry already where we debit bank and credit the asset. So the asset is reduced by 20,000. So from the 31st of May onwards, the balance becomes 80,000 until the end of the year. So that's what the general ledger account would look like if you had a loan or you had an investment, and this is the capital portion. There's no interest included in these ledger accounts. So in this first step, what you could do if they asked you to work out the interest expense or the interest income for the 12-month period, based on what we've just worked out now, we could actually calculate that, because we know that for 5 months the balance was 100,000. If we assume interest is 10%, then 100,000 times 10% for 5 over 12 months is 4167. And then for the last 7 months, the balance became 80,000. So we work out interest 80,000, 10% for 7 months. That gives us 4,667. So those two amounts added together is for 12 months. So the total interest for the whole year would be 8,834. So if you had to do the statement of profit and loss and you were dealing with a loan, then your expense for interest would be 8,834. But if you were dealing with an asset on which interest is earned, then your interest income would be 8,834. So it just depends on whether you had a liability or an asset. If it was a liability, you have an interest expense. If it was an asset, you have interest income. And you would only do this calculation if you were asked to do the statement of profit and loss without doing journal entries or ledger accounts. So you basically know what your capital balances were, when they changed, and you know your interest rates, so you can work out your interest for the year. Then the next step arises because sometimes you get asked to do journal adjustments at the end of the year for interest, and you have to reverse the adjustments of the previous year. So with step 2, before you can do that, you have to check the dates when interest is normally received or interest is paid and work out the number of months that's unpaid at the end of the year. So in this question, we can assume that 1 month before the end of the prior year, interest was last paid for the previous 4 months. So interest gets paid every time for the 4 prior months. So 1 month before the end of the year, interest would have been paid for the 4 months up to that point. So by the end of the previous year, there would have been 1 month that we would have needed to accrue for as interest because it would not have been paid yet by the end of the year. The next interest payment would happen 3 months into the next year. Interest would then be paid for the previous 4 months, of which 3 months relates to the current financial year and 1 month relates to the previous financial year. Then interest gets paid again in 4 months' time. That 4-month period for which the interest relates, because it's going backwards, it's interest in arrears, that's all in the current financial year. And then this interest payment happens 1 month before the end of the current year, and that's also for 4 months of the year that we're busy with. So here we have our current financial year. Here's 3 months. That's the first interest payment. That's for 3 months of the current year, plus 4 months, that's 11. So we have 1 month of interest here that we still haven't paid, because the next payment will happen 3 months into the following year. So by the end of this year, I need to account for the fact that there's 1 month of interest that hasn't been paid. If I had an investment, then instead of talking about interest being paid, we'll talk about interest being received. So that means the last time I received interest before the end of the previous year was 1 month before the end. So that means I would have accrued for interest income at the end of that year. Then 3 months into the next year, I would have received my first interest payment for that year, of which 3 months would have been interest for this year and 1 month for the previous year, because every time I receive interest for 4 months. And then again, this interest I receive would be for that 4 months. The interest I receive here would be for the previous 4 months, which means when I get to the end of the year, there's 1 month of interest here that hasn't yet been received that I need to account for at the end of the year. So what we are doing here is we're working out the dates when interest is received or paid to work out the number of months unpaid at year end. So it's 1 month and 1 month. So that's the purpose of what we're doing there. And the reason we're doing that is because now in step 3, we're going to calculate the accrued interest at the end of every year, because we are saying that we get asked to do a general journal entry, or we need to know how much the interest accrual is at the end of the previous year and the end of the current year. So what we're saying at the end of the previous year, there's 1 month of interest on 100,000 Rand, because we said the 100,000 Rand opening balance was the same for the whole of the previous year. So that 1 month interest had not yet been paid. So to get that interest amount, we multiply by 10% and times by 1/12. Whatever that interest amount is, we would have an accrual for interest at the end of the end of the prior year, which we would then do a reversal for at the beginning of the current year. And I'll show you those journal entries now. Then at the end of the current year, I would again have interest for 1 month that hasn't been paid. So I have to make an accrual for interest. Now the balance is 80,000 in this period, and the interest hasn't been paid for 1 month on that 80,000. So the only difference between the 1 month at the end of the previous year and the 1 month at the end of this year is that it's now on a lower balance, because during the year the capital on the loan was repaid. So this is the calculation that we would then do to work out the interest accrued, so that we could then do the journal entries for the accrual and for the reversal of the previous year's accrual. So let's now go and look at what the general ledger accounts would look like. So I'm busy with the year that starts the 1st of January and ends the 31st of December. And at the end of the previous year, there was 1 month of interest outstanding on 100,000 Rand at 10% for 1 month. That's 833 Rand interest that hadn't been paid for December 2021. So last year we would have debited the interest expense and credited this liability. This is an amount that is owing at the end of last year. So that would be the balance brought down from the previous months. If I'd had an investment, then there would have been 1 month of interest that I hadn't received, but I'd earned. So I would have last year accounted for that as interest income. I would have credited interest income and debited accrued interest income. This is an asset. It's like a debtor. It's an amount that is owing to me for interest, and I'd bring that down as my balance at the beginning of the year. So this asset account would have this balance in it, which is the interest for December that was accrued for at the end of the previous year. So then the first thing I must do is I must reverse last year's adjusting journal entry. So you need to read the question carefully. Sometimes these adjusting journal entries were already done. Other times you have to do the adjusting journal entry. Sometimes they will actually tell you if it hasn't been done or not. Otherwise, you need to look at a list of balances that you get given to see whether you have opening balances for any accruals for interest at the beginning of the year. Because if you do have opening balances, that means you need to reverse those opening balances. So what we're going to do for the loan, remember the accrued interest expense liability had a credit balance. So now I'm reducing the balance, I'm taking it away, and I'm crediting that 833 Rand to the interest expense. So that is December 2021's expense that's now being credited to the interest expense account for 2022. Then if I had an investment, last year I would have had an amount owing to me for interest. So that would have been an asset that I would have had last year for accrued interest income. Now I'm reversing the asset, so I'm crediting the asset and I'm debiting that 833 Rand, which was the interest that I'd earned for December 2021. I'm debiting it to this year's interest income account. So what will happen in 3 months' time, when I pay the interest expense for the previous 4 months, I will debit the interest expense account, and this 833 will reduce it, because that interest for December 2021 was accounted for last year. When I receive the interest income 3 months into the 2022 year, then that will be a credit to the interest income account, and this debit to interest income will reduce that, because the amount that I'm going to receive will include December 2021, and I want to take it out because that was shown as interest income in the prior year. So this is what that journal entry would look like when I post it. So the journal entry I've just shown you, you're now taking away the accrued interest expense that you had at the beginning of the year. So this is a reversal of the adjustment that you did at the end of last year. You're debiting the liability to reduce it, and you're going to credit the interest expense. And if I had an investment, I would have had accrued interest income owing to me at the end of last year. Now, on the first date of the next year, I will reverse that. So I will credit this and debit interest income. So this is the one leg of the entries that I've just shown you. Then the other side of the entry is that I'm reversing last year's interest for December 2021. So I debited my accrued interest expense and I credit this year's interest expense. This is the interest for December 2021. Then I have, if I had an asset, then my interest income account, when I reverse last year's interest, I will be crediting the accrued interest income from last year and debiting this year's interest income. And this is for the December 2021 interest that I'd earned. So normally interest expense will have a debit. This is reducing it because this is December, this is last year. Interest income has a credit normally. That's reducing it because December, this is last year's interest income that was earned. So the next journal entry you need to do is to do the accrual for interest at the end of the current year. So I've just shown you the journal entry where you reversed the interest accrual at the end of the previous year, the beginning of the current year, you do that reversal. Now we're going to accrue for interest at the end of the current year. So this is what you would then do. So now remember, at the end of the year, the balance changed. Actually, 5 months during the year changed to 80,000. So that 1 month on which I still owe interest, the interest is going to be 667. That's 80,000 times 10% divided by 12. So at the end of the year that I'm busy with, I'll need to do an adjusting journal entry for December 2022's interest. I debit the interest expense and I credit my liability. I owe that interest at the end of December. And if I had an asset, then the last time I received interest income is 1 month before the end of the year. So there's 1 month of interest income that I still need to account for. That's also 667 Rand. But now I credit that because it's an income and I debit accrued income, interest income. This is an asset. This amount is owing to me for interest that I've earned at the end of the year. So those are my adjusting journal entries at the end of the year when interest is paid in arrears. So when interest is paid in arrears, you will always have an accrual for interest. If it's a loan, then you have an accrual for your interest expense. If it's an asset, you will have an accrual for interest income. Now we're going to post that adjustment that we did, the journal entry, to the ledger accounts. So if we had a loan, we had an amount owing for interest for December 2022, 667 Rand. So that's a credit to my accrued interest expense account. That's December's 2022's interest that's owing. And if I had an asset, it means I have interest that's owing to me. So I have accrued interest income of 667 Rand. So that's a debit to the accrued interest income account. That asset is increasing. So now we're going to post the other side of the year-end adjusting entry. So remember, if I have a liability, I have interest that I owed. So I already credited accrued interest expense. The other side of the entry is a debit to my interest expense account. So I'm increasing my interest expense for the interest for December 2022. Then if I had an asset, I'm earning interest income. So the journal entry was a debit to accrued interest income. Now I'm crediting my interest income account because my interest income is increasing by 667 Rand. That's the interest income that I've earned for the month of December 2022. So that's what the journal entries would look like for the adjustment for interest at the end of the year, for interest in arrears. And that's what it would look like when you post it to the accrual and to the interest accounts in the general ledger. So in my general ledger accounts for the interest expense, I have on the debit side the interest expense for December, and that would be if I had a liability, I owe interest. Then if I had an asset on which I earned interest, On the credit side, I have the interest that I've earned for December 2022. So all that we've accounted for here is the 1 month of interest at the end of the year that hasn't yet been paid. We haven't accounted for the rest of the interest. We've done this because we are saying sometimes the question asks you only to do the adjusting entries. And that's what we've done here. I showed you the general journal entries for interest, and then I posted them to the general ledger accounts. Then the final step is necessary if you have to now work out your interest payments. And usually this is also necessary when you have to prepare an interest expense or an interest income account for the year. Then you have to work out your interest payments. So the interest payments, basically we want to know every time what is the interest that we will be paying if it's a loan, or we will be receiving if it's a liability at this period when we have got the amount that's coming in or the amount that's going out. So let's look at each of those dates and let's look at what the journal entries would look like for interest paid first. So on the 31st of March will be my first interest payment that falls into the year that I'm busy with. Remember, my year is from 1st of January to the 31st December 22. So on the 31st of March, I'm going to be paying interest for December 21 up until March 22. So that's December 21, January, February, March 22. That's 4 months. The interest amount that I'm going to pay is on the balance of 100,000, 10% interest for 4 months. And that amount is 3,333 Rand. That's going to be debited to my interest expense account. Now remember, this December amount, when we look at the account, you will see that amount has actually been credited to interest expense, which basically takes it out of this payment. But this is the total amount we're going to pay for the 4 months on the balance of the loan at that point. Then at the 31st of July, we're going to make our next payment. We're going to pay for April, May, June, and July. But now we need to remember that the loan balance actually changed at the end of May. So it was 100,000 Rand at 10% for 2 months. That's for April and May. But then from May onwards, the balance goes down to 80,000. So for June and July, I'm going to be paying on 80,000 at 10% for 2 months. If you add those two amounts together, that's for 4 months, April to July, the total interest expense is 3,000 Rand. Then the final payment, it's on the 30th of November, and then we'll be paying for August, September, October, November. So remember, this is payments in arrears. So if we take those 4 months, for that period of time, the loan balance was 80,000, interest is 10%, that's 4 months of interest we're paying. So we'll pay 2,667. Okay. So these are the payments that we've agreed with the whoever we've borrowed the money from. We're paying these payments 3 times during the year. Each time we're paying for 4 months in arrears, and all of those amounts get debited to the interest expense account. So in my general ledger account, I will now have the following. On the credit side, I have the reversal of the December 2021 accrual for interest. So that is now on the credit side of my interest expense account. So it's reducing my interest expense. Then I have my payment on the 31st of March, which included December to March. So that 3,333 is for 4 months, includes December, but December gets taken out over here on the credit side. So the net effect is that I'm left with only the interest for January, February, and March, because December effectively gets taken out over here. Then I've got my payment for interest from April to July. We've calculated that amount. And then finally, I've got my payment of interest from August to November. That amount was 2,667. So finally, remember, we've already done this entry. we had to also account for December because December hadn't been paid. So December got debited when we did our original entry for the adjustment at the end of the year. We debited interest expense and credited the accrual because that's the only amount that is still owing for interest. Everything else has been paid. So now in my interest account, the debits add up to 9667. If I subtract the 833, the difference is a debit of 8834. So there's a debit of 8834, there's an expense of 8834. So we're going to credit this account and we're going to debit the profit and loss account. So that basically we're going to take that out of our profits because it's an interest expense of 8834. And that amount of interest that you saw in the general ledger account is the same as the amount that we already calculated earlier on when we did step 1. We calculated the 8834, that's your interest expense for the year. Then if we had an asset, excuse me, we had an investment, we would receive interest income. Our first receipt would be on the 31st of March. We would be receiving interest for December 21 to March 22. These amounts are exactly the same as the amounts you saw when we did the interest expense calculation. But now we're saying we're going to debit the bank account because we're going to receive the money and credit interest income. So this interest income is for 4 months, but when we look at the interest income account just now, we will see that December 2021 gets debited to the interest income account, so that reduces this amount that we've received. Then for the 31st of July, we receive interest on a balance of 100,000 for April and May, that's 2 months. And then we receive interest on a balance of 80,000 for June and July, that's 2 months. That amount is 3,000, we credit interest income and debit bank. And then on the 30th of November, we receive the interest income for August to November on a balance of 80,000 at 10% for 4 months. The interest income is 2667. So now if I look at my interest income account, this is the accrued interest income that I reversed for December 2021. Remember, income is increases equity, so it has a credit balance. So when we have something on the debit side, it's reducing income. So that 833 was already shown as income last year. It's being debited to the income account this year. So when we received this payment on the 31st of March for December to March, we received the December amount, but we've now reversed the amount for December because that amount is actually shown as income last year. Then from April to July, we received 3,000 Rand, and that is credited to my interest income account. And then from August to November, we received 2,667, which gets credited to our interest income account. So here we have January to March, April to July, August to November, and finally we already accounted for December 2022 when we did the adjusting entry earlier on in step 3. So that was the interest that was earned as interest income, and we showed that as an asset. That's an amount that is owing to us. We will receive that 3 months into the following year. So again now, the credits will add up to 9667. If I subtract the December 2021 amount, I get this 8834, which is exactly the same amount you saw just now, but now it's on the credits being bigger than the debit. So I'm now going to debit this account and take that amount to the credit side of my profit and loss account. This is going to be income, interest income that I've earned. And remember when we did our calculation earlier, we said if this was an asset, you would be earning interest on 100,000 for 5 months and then on 80,000 for 7 months. That 8834 is the interest that you've earned for the period. So now we've gone through the 4 steps that I suggest that you follow when you're doing interest calculations for when interest gets paid in arrears.